I want to thank everybody for coming. We're going to respect everybody's time today. We'll end at by 4 o'clock at the latest. All right. We're going to be going over about the credit scores, how the medical bills affect the credit scores, how they affected the credit scores, a couple years ago versus how they affect the credit scores now. What to look out for, what to do, what not to do when it comes to medical bills, etc. And then after the presentation, I'll ask if anybody has any questions. It could be, when I ask that, it could be any question about anything you want that pertains to credit. I mean, it doesn't have to be about the medical bills per se. It could be anything about credit scores or credit reports or, anything that involves credit at all. Right. So, and then a couple announcements. Great news. I am now a wholesale account executive for a mortgage company, which means I'm not a mortgage broker. It means I go to mortgage brokers to get them to submit their loans with us to close the deals. So that's a good news. We're licensed. Their company I just signed up with is, or recruited me, is signed up in 6 states right now and waiting for the other states to get approved. But if you're not in one of those states, we can still get you done because we have corresponding lenders that we work with as well. All right, let's see, make sure everybody can see this. Can everybody hear me okay? Let's see. Hear me, okay. So if you could type in that you can hear me or unmute yourself and let me know you can hear me. If you can't hear me, can you hear me, everybody? Or text in, or sorry, or in the chat box here, put in that you can hear me. Yes, no. Gotta make sure everybody can hear me okay. Oh, should be. Can you hear me okay, everybody? Here, Alfred, I'll unmute you. Can you hear me? Alfred.
Yes, I can hear you.
Okay, good. All right, I'm gonna mute you now. All right, so good. Everybody can hear me. All right, so it's about I don't know, a couple minutes after, right? Let's see, 5 after. Yeah, it's 5 after. All right, so I got a lot to cover, so we'll go ahead and get started. Again, if you have any questions, you can always put them in the chat box there, and I'll go back and answer them when I get done with the presentation. Or you can wait till the end of the presentation and unmute yourself or put it in the chat box. Either way, and ask whatever questions that you have. So also, if if you're in need of any other services besides credits, let us know. We have a lot of affiliates from auto dealerships, of course, mortgages, attorneys, all kind of different attorneys, from consumer protection down to litigation and real estate, you name it, insurance attorney. So if you need any other service, we have, the blue collar workers from the AC, we have AC technicians and plumbers that are local as well. And if you're outside of the area, just, let us still know, we can see if we have any contacts in your area as well. All right, if you're not local to us, which is South Florida, anyway. All right, so anyway, what we'll cover, or I'll cover here today, is the classic FICO from the credit repair business perspective. That'd be my perspective. All right, FICO 08. Well, what does that mean, FICO 08? Which I'll explain what FICO and classic FICO means. The credit repair daily issues, I'm not really going to go into. This was a presentation of a friend of mine, so I thought it was a good presentation, so I thought I would pull it up. So anyway, so let's talk about the classic FICO. So, just kind of go over this real quickly. Is what does a credit score mean? Well, it just really means it's a risk assessment based off of, your current habits on your credit. So here's the specific definition when it comes to being an expert with this credit and everything. So it predicts the statistic that you'll be 90 days late on one or more particular accounts that you have on your credit. All right, so the 90-day date is like really bad. I mean, that's getting into just as bad or almost as bad as a collection, you know. So I mean, so it's almost about, if it's not already a collection, because the auto usually within 90 days they'll come and repo the vehicle and put it into collections, but a lot of other ones usually wait up to 180 days depending on the category. So anyway, so again, a score is calculated based off the information that's on the credit report, all right, which is called the credit file to the credit bureaus. And it's available for 3 credit bureaus, all right, but this is not necessarily all true because it can be used for pretty much any credit report that a credit score can be. It doesn't have to be the FICO credit score. Now there's different types of credit scores, you know, which I'll go into with you as well. So how is it calculated? All right. So right here, they're looking at, you know, 1.5 million credit reports over 2 years. So now I think they're up to like 300. No, I think credit bureaus are saying now they have like 350 or 300 million people credit reports right now, credit files. All right, so they're segmented into what they call scorecards, which I'm not going to get into all that detail about, but that's why when you see some people with a bankruptcy with a high credit score that went through bankruptcy and has been discharged, they have a high credit score versus somebody that doesn't have a bankruptcy and has a lower credit score than them, but has some collections, then, you know, it's because they're going between credit scorecards. All right, so they have like 12 different scorecards depending on where you are or what's on your credit report. So like, give you an example, somebody with a bankruptcy would be in everybody with a bankruptcy would be in scorecard 12. Somebody with no collections, no derogatories, no lates would be in scorecard 1, and then broken down in difference. So, all right, so let's talk about, we'll go over, let's see, wait, come up here. All right, so what we're gonna do, we're not gonna go really into the scorecards a lot, is again, I'm gonna go into about the medical bills. So the way the medical bills have changed, or way they affect your credit right now, because that's the main thing we want to talk about, and then we'll go some more into credit scores, is that, okay, first, collections were just like every kind of other collection, counted the same on the credit scores, all right, against the credit score, shall I say. All right, and so now thing has a change, just like, you know, you have Windows, Microsoft Windows, it goes through different versions, and same thing with the FICO credit score, you know. So now we're at FICO 9 or 09, right, which nobody's really using because it's really new, and it takes a lot for an industry to change their credit scores, you know, for what they use, the model that they use, because you got to think, if you're using one particular model and then you change it, it's kind of throw things off, because you're trying to always do a risk assessment based off of who you're lending money to, you know, or who you're doing business with. So, you know, so with the old credit scores, especially like the mortgage credit scores, they're using an old credit score, FICO 4, FICO 5 credit score. That's because of Fannie Mae or Freddie Mac are the largest mortgage holding companies in the United States. So that's the credit scoring model that they're using and the version that they're using of FICO. So that's what everybody else uses, you know. So if you have a medical and you're pulling your credit to get a mortgage, that medical is going to count just like a regular collection if it was T-Mobile or Comcast or, you know, cell phone, I don't know, whatever kind of other collection, all right? So yeah, count the same. But now as it changes through the FICO version, if you go to, let's say, an auto dealership, most of them are pulling FICO 8 right now, or 08, all right, for the auto industry. So that particular medical collection won't count as much into the credit score as it would in the older versions of FICO. All right, so that's the main thing that you see. Now it just came out as of, I believe it was March or April this year, called the National Consumer Assistance Plan. All right, so that just came out, and that's what took off all the judgments. So there's no more judgments on anybody's credit anymore. All right, but there are still public records, so they can still be found with the court system. And also tax liens are on nobody's credit report anymore as well. All right, and also the way it affected the medical bills is that now it says that if you owe a medical bill, they have to attempt to collect on that medical bill for at least 6 months before they put it on your credit as a collection. The reason they did this, they explained, is because to give your insurance companies a chance to pay that medical bill. Because there's a lot of times, and it's happened to my mother, and it's happened to a lot of people, being in this industry, but it's even happened to, family members, is, she had coverage and she got a medical bill collection, and she called and had to do with the paperwork of the hospital, sent it to the insurance company, and something not being exactly right the way they want it, so they kick it back. And when they do that, sometimes the hospital don't fix it and send it back. Sometimes they kind of gets messed up in the system, and then, oh, well, they send it out for collection to the patient. So, so anyway, so now 6 month period before they can put it on your credit. If it goes on your credit and the insurance company pays it after it went on your credit, then the credit bureaus will automatically remove it from your credit. All right. But the insurance company has to pay it. If it's under $100, it's not going to count against your credit score at all. It's going to ignore, I think all collections, not even just medical, but all collections under $100 are not going to count against the credit, which is great. I mean, I am not kidding you guys. I've seen a $3 collection. A $3 collection. It costs that collection company more to put it on their credit than the collection was worth. And it damages the client's credit, our clients, the consumer's credit, just as if it was a $3,000 collection. Collection is a collection. So, okay, so again, the medicals get removed if the insurance company pays it after the fact. Under $100 doesn't count against you anymore. And now medical collections don't weigh as much against the credit scores as they did in the previous versions of FICO. All right, they still count against you, but not as much, is what FICO said to us. All right, so that's the main thing. That's the main categories or what really happened with the medicals going against the credits. All right, so if you can prevent, of course, any collection going from your credits, that's always a good thing, but once it gets onto the credit, even if it's a medical collection, let's say you didn't have insurance or you had a high deductible or what premium or whatever it is they call it, and you didn't pay it, it got put on your credit, so, and it's over $100 and your insurance is not going to cover it, we'll pay it later. So, and it's all on you. So what you do is you contact that collection company, ask them if they can do a settlement, which is less than what you owe. Also, you're going to request and ask, because remember, if you don't ask, you'll never receive. So if you ask them to remove it as a part of the settlement agreement, and make sure you get it in writing if that ever happens, because if they don't remove it and you don't have it in writing and then you go back and argue the fact to try to get it removed, they can just say, oh, well, we don't have any recollection of that, or we never said that, or whatever. And I've seen that happen to people. So writing, 9/10 of the law is the evidence. All right. So again, that's the main thing about medicals. All right. So we'll dip in here. You have a question, Offer?
Yeah.
Okay, go ahead. No? Okay. All right. Yeah, mute yourself. All right. So, all right, let's see here. All right. So here we're going back into the credit scores again. All right. Give me 1 second, please. All right. So here's we're talking about consumer default. What are the odds of consumer um, getting a default? So here are the odds. All right. So the odds of somebody having a credit score between 720 to 799 is 649 to one person. All right. So these just going through the different odds of what you would see on of somebody having a particular credit score. So you can see that the odds of having somebody having below 620, it's a lot greater, you know, odds than somebody having upper credit score. So right now, I think the average credit score in the United States, believe it or not, which I found hard to find, I think it was like 680, 690. It was pretty high. I was surprised. So I looked at a map of all the different states that showed which states had the highest credit scores and which states had the lower. So you would notice that other states along the water, you know, especially the Eastern Seaboard, like Georgia, Florida, and stuff like that, and the higher places had lower credit scores, and the middle Western states, you know, in the middle of the United States, had the highest credit scores. You know, so like I say the people where nobody is, but it's people, of course. But like the Midwestern states had the highest credit scores versus, you know, the coastal states. And so some of the lowest ones, of course, were like South Carolina, Georgia, Florida. You know, the higher states, they say, you know, you have lower credit scores, I guess, different spending habits or whatever. All right, so how long does something stay in delinquent on your account? I'm here to ask this every week. So 7 years from the date the account goes into collection status, not the date that you started being late. So that 30-day late mark doesn't count, the 60-day late mark, 90-day late mark, when that collection company puts it into a defaulted collection state. That's when the 7-year mark starts. Okay, so sometimes it can be 180 days after you quit paying, or you know, so before they put it in there. So technically, then it's 7.5 years, but 7 years from the date the account went into collection status. That's how long it stays on your credit report. Oh, you put a chart on here for us. So that was regular collections, like I told you. Here he put 7.5 years, like I just explained, because usually it takes 6 months before it actually goes into a default state. But really, it's, you know, because that's why he put from the first late payment, but it's 7 years from when it defaults. You know, judgments, which were don't care about anymore. Inquiries only count against you 1 year. I don't know why he has 2 years on here, but 1 year they're showing your credit report for 2, but they only count against you for 1. All right, and they're the least thing. Chapter 7, he's got this wrong. Chapter 7 stays on your credit report for 10 years. Chapter 13 stays on there for 7 years. All right. So what are the determining factors of a credit score? We went through this 2 weeks ago, which I'm going to send everybody an email that attended this, so you can watch it later on as well. And then it's also going to be recorded and put into the educational center in your backup in your portal. All right. So to break it down real quick, and these are FICO credit scores. So there's the FICO credit score, there's the Vantage credit score that you see on Credit Karma, and there's other credit scores as well that, you know, credit, if you're a company, you can create your own credit score, but you got to have it validated that it works and everything else, you know, but you can create your own on risk assessment, however you want. So 35% is paying your bills on time. Okay, so if you're 30 days late, 60 days late, so forth, or have a collection, that's in that 35%. Okay, so past due, 30-day late, well, or public record as well would be into that 35%. All right. Let's see here. Oh, it's continuing on about it. So in summary, like he says, pay your bills on time, don't get sued or lose and pay your taxes. Oh yeah, okay. So yeah, you don't want to get sued because if you have a credit card especially and it goes into default, they have a right to take you to court to file a judgment against you. And if you own property, that will go against the property. Or if you try to buy a house, then they're gonna say, hey, you gotta settle this first or it'll affect the title. All right, so this is mostly, it does include installments on this 30%, but it's mostly revolving like you put here, which is credit cards. Okay, so it could be a store department card, considered a credit card. It's revolving, and report as revolving on your credit. Besides a HELOC, which is a home equity line of credit, they do report as revolving, but the scoring system doesn't look at that because it recognizes it's coded in a certain way that the scoring system recognizes it as being a mortgage, second mortgage type. All right, so the higher your balances on your credit cards, the lower your credit scores. All right, so the rule of thumb is no more than 30% of the limit. So if you have $1,000 limit, no more than $300 balance. That's the rule of thumb, but the sweet spot, 1 to 10%. Okay, haven't paid completely off, very little points difference between that 1 to 10%, but they looked at the other people with the 850s. It's got like paid off, long history, and 1 to 10% balance of the credit card. All right, the issues, again, I just kind of went through there. Installments, a very little factor, and that 30% pays close to zero as possible. If not zero, I just say do it. So play the game if you have time. That's playing that, getting it to that one spot, 1 to 10%. And what you always want to do is look at your credit report and see when the last time it was updated. So if it was updated June 23rd, you can kind of estimate pretty sure that the next month on the 23rd, July, that it's going to be updated again, that you balance. All right, so if you have your balance, if you pay it down before it reports, that's what's going to be reported on your credit at that time. All right, so some people say, oh, my due date, I pay it down for my due date, and then I use it after the due date. Well, sometimes they might report a couple of days after the due date. I know Capital One does that. All right, so again, here's the 30% mark. Once you go above that, they really start dinging your points on that. All right, let's see, effect on the score type. See, you got the unsecured and secured credit cards. They're the same. They're the same. It reports as a revolving debt. It doesn't matter if it's a secured credit card or unsecured credit card. It doesn't matter if you have a $10,000 limit or $100 limit. What matters is that percentage compared to that credit limit. So if you got a $1,000 limit, of course, you don't want to be over 300. If you only got a $100 limit, well, you don't want to be over, what's that, $30, right? So that's the way it works. It's not, so you just have more of a cushion, so to speak, if you have a $10,000 limit versus a $100 limit. $100 limit, you can't even hardly use the card at all, or, you can use it, but you have to pay it off like before it reports. All right, so American Express is not considered revolving. So get this a lot. American Express has changed actually since this particular slide was made. So they have some American Expresses that are revolving, open regular credit cards, and then you have what they call a charge card. Not a credit card, it's a charge card, which is a 30-day net account. So technically with American Express, when it came out for a long time, you were supposed to pay it off within 30 days of using it, or the next billing cycle or whatever. And so it didn't, and the credit score does not count charge cards in the revolving debt because it's not technically revolving, it counts as open. All right, but now they do have some American Express that are revolving that they came out with over the years. All right. And joint accounts are never a good idea. I mean, that's a fact because I always try to keep your wife separate from yours. Because if you have a joint, something happens with one or both or relationship, whatever the case may be, then it's going to affect both of your credit. So if you have a credit card or she has a credit card that you want the other person to use, add them as an authorized user. Okay. So then you still have the ability to use her card if you're authorized user on it, and vice versa, and even that report on your credit and it could benefit you, which is kind of a loophole in the system. But anyway, but if something happens and you authorize user and it's reported on your credit, then you just you can either contact the credit card company and have your name removed off of it, and then that account would become terminated. They'll show on your credit bill, be show terminated, and it doesn't count in the scoring system whatsoever. And then if you want it removed from the credit, you just write a letter saying, hey, I was not financially responsible. Please remove this from my credit. They do it 100% every time. All right. Let's see, exceeding the limit. These are, when you get higher balance, the lower your credit scores are. All right. So 50% of your FICO credit score is the age, all right, of your credit. So what it does is it looks at each of the accounts. You had this one open 1 year, you have this one open 10 years, you have this one open, 5 years or whatever. All right, so you get points, part of that 15% into that, and then it is an overall average. All right, so if you have one for 10 years and you have one for 1 year, right, or you just open one, let's say that you have one for 10 years and you just open one. Well, before you opened that new one, your first one, now you had a 10-year-old credit history. Well, you open that second one, now your average just went down to 5, right? So, because you divide by the number of accounts. Excuse me. So, the older the account, the better. Don't close your credit cards. If they do the interest rate high, pay it off. Don't use it once every 6 months. Buy something small, pay it off, and you're continuing to get that age. All right. And the AU, by the way, was authorized user. All right. So 10% is mixed credit. What do we mean by mixed credit? Okay. So you do at least one revolving debt. He says 3 to 5 here. Really, you just need one, but there's no real like number of credit cards that you have to have. Actually there is. You gotta have at least one, or you gotta have one revolving, which could be a store department card, MasterCard, Visa, Discover, etc. All right. So 3 to 5, okay, but just really need one. I recommend getting no more than 3. Some people get in trouble. Auto, to me, auto is an installment. That's why he put in that. That would be an installment loan. So you want one installment, one revolving. This is the minimum I'm telling you. And that will get you that 15% of the credit score. And if you get a mortgage later, then it's still installment because you're paying it until it's paid off, and that's the end of it. You can't extend the account anymore. So inquiries. These are people or financial institutions that check your credit score, check your credit, to get you financing. So if you go to an auto dealership, or more, get a credit card, apply for a credit card, this is that called a hard inquiry. If you go to Credit Karma or any of these other places and check your own credit, it's a soft inquiry. Does not count against you, okay? Will not count against your credit score. All right, so only when you get somebody else to check it, the financial reason, then that counts against you. Now, auto, student loans, and mortgages, you have a 30-day window to shop around as much as you want in those 3 categories, with only one coming against you. What do you mean, John? I mean, if you go to a car dealership and you get these, a lot of times this happens all the time. They have all these different lenders, and so they just run it through all these different lenders all at once to see who comes back with what. So now you got your credit check 10, 15 times. depending, and you'll see them all listed on your credit under the hard inquiries. Well, that 10, 15 times that count against your credit scores. Only one of those other than the 10, 15 count against your credit score. And if you go somewhere else and check for a different auto financing, then within that 30-day period, then none of those are going to count against you. And the same thing goes with mortgages, and the same thing goes with student loans. Why do you say, John? I say because I lost my train of thought, so somebody interrupt me. All right, so, okay, so student loans, okay, because you don't have the terms and conditions written, you don't know anything about the terms and conditions. This is what FICO says. But when you apply for a credit card, it says right there, what are the terms and conditions? You're going to have an interest rate between 9 and 29%. You're going to have an annual fee or not, or whatever. So you already know you don't know the exact terms and conditions, but you know a figured term and condition. All right. So credit cards are 1 for 1. They always count against you. And there's no cushion period. And student loans, auto, and mortgages, 30-day period. All right. So insurance doesn't count against you as well. And employees pulling your credits, which do not get a credit score, they just get your credit report, do not count against you as well. Okay, and this, he's saying, see the 30-day window here. He says 45-day window with a 30-day buffer. So, you have the 45-day window, but they're giving you a 30-day buffer on that. Mortgages and autos are separate as well. So again, that's the basic credit score. He's talking about the FICO 8 here, which is what a lot of people are using now, versus the FICO 9 because it's fairly new. All right, so he's breaking it down. It's similar to the old one, but they updated the reason codes of what affects your credit scores. All right, they included some better implements in the current product, which is the HELOC, which is a home equity line of credit, not counting as a revolving. All right, and then he's talking about commercial as well. Higher credit scores will be even higher because the way they're weighing things now. So now the FICO 9, the credit card balances, even affect you even more than before. All right, so they're counting that a lot more high. Same thing with FICO 8. Here it says right here, it's counting you more against your credit scores. Authorized users still be scored. Now FICO is saying that if you bought a authorized user trade line, meaning that you pay this company or somebody to add you as their authorized user on their card, that it's not going to be counted in your credit score. How do they know? That's what we asked. How do you know that's it's not a family member or something? It's we have ways of knowing. Okay, they wouldn't tell us why. All right, so again, I told you here, anything under $100 will not be counted against you. All right, and if you pay it, if it was from 200, 200 whatever, and you paid it, it does not count against you as well. All right, and this doesn't apply to in-house trade lines and the collection department. All right, so it means that collection companies that own the debt. All right, all collections, not just medicals, under 100 do not count against you, as he says. All right, so here he's talking about the different models, because if you get your credit checked, if you go to myfico.com and check your FICO credit score, which it shows you a lot of different FICO credit scores, like you have listed here. So you have the bank card, meaning that if a credit card company checks your FICO credit score versus going and getting a personal loan versus getting a auto check, all these credit scores, even though they're FICO, are going to be a little bit different. All right, because it's industry specific of who's pulling the credit. All right, so if you have a car repossession and you try to go get an auto loan, your FICO credit score is going to be a lot lower than, say, a mortgage FICO credit score. Okay, so it's industry specific based off a risk assessment of that particular industry. Okay, So that's the different ones, and we'll go into, let's see how much time we have left. Oh, so yeah, we got going on time. All right. Like again, if you have any questions or whatever, you know, you can always chime in and unmute yourself or text or whatever here. All right. So Vantage Score. What is the Vantage Credit Score? Vantage Credit Score is the 3 credit bureaus, the 3 big ones, because there's more than the 3 big ones. Is Equifax, Experian, TransUnion got together and created this Vantage Credit Score to compete against the FICO credit score, because FICO is a whole separate company than Equifax, Experian, and TransUnion. So they created this Vantage Score. So right now it has about 10% of the market, like Macintosh or Apple computers versus Windows computers. And so when you go to Credit Karma, this is what you see. They have the Vantage 2.0. Now they have the Vantage 3.0. Credit score range is still the same, 300 to 850. On the Vantage 3.0, that is. It's different than the Vantage 2.0 credit scoring range. And it's FICO's competitor. And so this is what you see on Credit Karma and some of the other credit monitoring systems. So just make sure you know what kind of credit score you're looking at when you're looking at a credit score. Is it old FICO version, a new FICO version? Is it a different credit scoring model altogether? You know, what is it? You know? So that's what you need to know, you know, before you apply for any kind of credit, you know, to get an idea. All right, so here he goes into identity theft, about identity theft affidavit. Anybody with identity theft, we can help. I've helped many people. I've removed 7 foreclosures off of one lady for identity theft. Craziness. All right, took a while, but some years ago. All right, so under disputes, we're not really going to go into all this, you know. So if you're looking to buy a home or something, you can't have anything in the dispute, because it'll say in the dispute on your credit. You can't have anything in dispute going to buy it. You have to take it out of the dispute process. All right, collections. He's talking about re-aging. So some of these collection companies will try to change the date of the collection to keep it on there longer, which is illegal. Best approach how to settle. Okay, again, I kind of went through this before. You know, if you can agree to delete, you know, to try to get them removed. Don't ask original creditor to remove it off of your credit as a part of the settlement agreement. It's not going to happen. I'll tell you that right now. You know, so third-party collection companies, you have a good chance, but not all of them will do it. Oh, it's not our policy. We can't do that. Well, they can, but you know. So, and you have to look at your state, depending on statute of limitations, when somebody can take you to court, file against you. All right, so that's state specific. All right, and let's see that. Done period. Okay, these are more collections information that he has on here. They settle for less than the full balance. Usually it's like 50% is usually what we see that they'll settle for. All right, short sale foreclosures. You know, we've seen the foreclosures and short sale. So if you have any of those or know somebody does, you know, we have a forensics person now that is going through the mortgage documents, looking for any kind of violations, or anything she can find to use against the credit bureaus, or I mean, the mortgage company, because especially the older mortgages in 2008 or before, or right around that area. Even now, I mean, we still find some. All right, so you know, short sales are reported differently. We're going on the student loans here. Can't do a bankruptcy. Can't include student loans in federal student loans in a bankruptcy. Stay with you forever. As a matter of fact, I think it just surplus the credits, the credit card debt. Surplus the credit card debt. You know, it's like $1 trillion or some dollars. You know, student loans. So if you know somebody with student loans, federal student loans that have an issue, or even private, let us know. We have affiliates for that as well. Rehabilitation program. This is a good program. I got into that after I got in the military. You're in the military. I forgot about my credit for the most part. I got out. You know, I had defaulted student loans because I didn't think I don't know. It's thought, okay, well, I'm in military active duty, so those are automatically kind of like forbearance or whatever, but that's not the case. So I went through a rehabilitation program. I contacted them up and they said, hey, you pay on time, X amount of dollars for 12 months, then we're going to remove it like it was never negative in the first place, which they did. So that was great. All right, this is some policies about credit repair. We can't remove every, guarantee 100% removal because it varies. All right, he's talking about some credit coaching tidbits. All right, what we got? Oh, he's going over some credit reports here. All right, so any questions? I'm going to go ahead and wrap this up. I got a few people out here waiting for me and stuff. So we're just looking at the different okay, so he's just talking about the different sites he has for the credit, for when you sign up for the credit repair, going into the portal, what it looks like and stuff like that. Talk about, the information. So your personal information on your credit report does not count against you or does not affect your credit scores, by the way. All right, so that's it with that one. All right, any questions? Anybody want to type in here? Any questions? So we can wrap this up. Anybody's got any questions? Type in. If you're on your phone, you can slide it over or whatever. Or you can raise your hand. I can unmute you. Any questions? I'll give you a minute or two to try to figure it out. If you have any questions.
Hello?
Yeah, go ahead, Offer.
Hi. I have a question for you. This is a question that what you're talking about already. If you have a medical bill more than $100, let's say for this one, it's $200 medical bill. If you don't pay, how this affects your credit?
Okay, so a medical bill over $100, is that what you're asking me?
Yes.
Okay, so a medical bill, it depends, that's over $100, that's a collection, that's on your credit. It affects it depends on what FICO version that you're using, but if you're using the FICO version 8, if somebody checks the FICO version 8, it's affecting the credit score by lowering it, but it's not hurting your credit score as much as it used to in the earlier versions of FICO. So give you an example, if you are going to get a mortgage, right? They use the old FICO versions, so that credit is going that collection is going medical collection is going to hurt your scores more than if they would have used the new FICO version credit scoring. Okay.
Okay. Now, what's happening? The one that let's say you're going for a blood test, and sometimes they send you out of the blue $35, $45. I don't know. You know how they're trying to stick you all the time with all of this small amount of money that's supposed to be covered by the insurance, and you just send you $35, $45, $25 extra for this and that from the blood test.
Okay.
How this one can affect your credit?
Okay. So let me break that down in a couple sections. One, if you're getting a bill for $35 or a medical bill that you know you shouldn't be because your insurance should have covered it, contact your insurance company and whoever sending you the bill to try to get it taken care of by the insurance company. Now, let's say if it does go onto your credit and it's a $35 medical collection on your credit, that's in the new FICO version, like FICO 8, that's not going to count against your credit score at all because it's under $100. All right. So, but in the old FICO versions, it still counts like a regular collection.
Okay. All right.
All right. Any other questions?
Yeah, thank you.
All right, sir.
Take care. Thank you very much.
Talk to you soon. All right. So, any questions, John, or anybody else? No? Okay. All right. So I hope you enjoy. We are going to have the next webinar in 2 weeks from now. So that would be 14 days from now. So now today's the 11th, so that would be the 25th will be our next webinar. If you have any requests of what you want to go over to discuss about the credit, please let me know because I try to come up with different ideas of what to discuss each every 2 weeks. We discussed the how the credit score works and everything else last 2 weeks ago. And so if you have anything in particular, let me know. Okay, John, you have a quick question? Okay, what's your question, John?
Yeah, thanks for it.
Yeah, go ahead.
When they pay off someone pays off let's say they have the medical and it gets on the credit report and it gets paid off, you said they have to recommend to get a letter first, or does it automatically have to be removed?
Okay, so now if the insurance company paid it off after it was on your credit, it will automatically be removed. Now, if you paid it after it was on your credit, then it's just going to show up as a zero balance and still show up on your credit and still affect your credit score. Now, what I said is before you pay it, contact them and ask them if they were willing to remove it as a part of the settlement agreement. And if they say yes, get it in writing before you make the payment. So it'll say something to the matter is once this account is paid for the sum of blah, 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 we have agreed to report to have it removed to let the credit bureaus remove it from your credit, something of that nature, and so then once you get that letter, you make the payment, and then if you want to expedite things and trying to get it off of your credit after you make the payment, then send the receipt along with the letter to the credit bureaus, and it'll be off faster than they will remove it themselves. Usually it'll take about 45, 60 days for the creditor to have it removed if they just do it themselves, to let them know. But if you send a letter in after you do the settlement, then you can have it removed off of your credit even sooner. All right. Hope that answers your question. Any other questions?
Thank you.
All right, you're welcome. All right, guys, thank you for so much for attending. Again, we'll be doing this again in 2 weeks. This will be recorded. This is being recorded and will be put in to the educational center. And also we will shoot out an email to you guys with the recording in case you want to review anything. All right, thank you so much for attending. Everybody have a great weekend, and we look forward to seeing you in 2 weeks. And